Some of you seem to like the, I guess the method of the last video where I kind of talk through my thinking so you can see really what it is I'm looking at right now, right? I'm in some buys. What I was looking at here, we had a short-term low broken, right? Market structure shift higher. This candle here is the breaker. Price trades inside the breaker, right? Then blast off. These are behind the fair value gap. My first entry was on this fair value gap here. And I was just adding every time we were hitting that. Right, we hit it one more time on this down close candle, creating an order block. Right, I buy one more time as we immediately rebalance and trade into the order block. So now we'll just kind of wait and see how it plays out, right? First targets here is this buy side liquidity pool as a partial. Then I have a higher time frame target here that will show as a price if price starts taking off higher. As you see, we're starting to get expansion. I like that. If we break this high now, right, I want to see this remain open. Perfect. So I'll move my stop. I'll actually go ahead and take one off here inside, right, this fair value gap, just in case price wants to consolidate. Partials always pay, fellas. So now basically our stop is under this swing low. We'll still take two off here. And right in that final TP is actually a 4-hour volume imbalance here. So that's kind of my final target, right? Just because I'm not sure where we want to reach inside this imbalance. So I like this volume imbalance because, right, if you also take the consequent encroachment of that fair value gap, they're very close in price. So the volume imbalance would be the final target though for me. Beautiful. I love seeing that. When price just rips for that liquidity like that. So there we go. Now we got partials. So now I only have one contract left, right? Now I'm fine. I could care less if I get stopped at break even here. As you guys saw, final TP will be that 4-hour imbalance. Why did I expect this fair value gap to be a breakaway gap? And why did I buy this one here? Some of you may be asking. I'll take the time to answer that now. If you look on this drive up, right, when this candle punches up and breaks structure, we trade back down, fill in the fair value gap that was left behind, and trade into the lower portion of that breaker block. So everything here now has been repriced and redelivered efficiently. So now on this candle, when we explode again one more time above this high now becomes a balanced price range. Okay, right? Because think of it as ICT explains. We've gone up, we've come back down with the, what is he uses the paint roller example. So we've painted up, right? We've painted down, everything's filled in. So when we leave this area again, there's no need to revisit. Now, right, I want to see this fair value gap hold price, ideally send us higher. Which I'll actually go ahead and throw one more contract in. And right, I'm also looking at this volume imbalance here. So I'm thinking, right, if we're going to remain bullish, we should hold here. So if price breaks through these lows, right, I'm really not interested in being in any longer. As you can see here, price is creating another volume imbalance. So now I'm monitoring this one, seeing this price, right, if we trade back into it, this price respect it and continue to send us higher. The volume imbalance is also in line with the OB, so we're just watching that to see how price reacts to these levels. I'm not paying attention to the profit or the loss, right? I'm looking at the candles and I'm seeing, are they supporting my ideas of price? And are they basically, right, aligning with what I'm thinking price should be doing at the time? So we created a fair value gap here, right, above that volume imbalance. So I'm just watching, are these bullish signatures being respected in price? Ideally, I would like this volume imbalance to hold and continue to send price higher. We still have that volume imbalance down low over here. We actually never traded into the fair value gap, right? These lows here are kind of equal lows that I'm looking at. So we can sweep these lows, pierce into that fair value gap, and still right reverse and continue higher. So that's permissible. All right, so we dive into this fair value gap one last time. We trade into the volume imbalance. Right, watch to see, does the body of this candle close inside of this fair value gap? Just so you can see, right? So we close inside this fair value gap. So now my stop's below this low. Right, I don't want this low broken. Right, I'm not nervous if this candle takes me out, that's fine. Right, price should hold. If price wants to go higher, this low should hold, which is why the stop is there, right? It's a logical area. Because it's below the fair value gap, it's below the volume imbalance, it's below the order block. Right now I'm watching, do we break above this fair value gap here? Right, I'd like to see price trade through that. And not obviously do what it's doing now, right, and respect it. Yeah, right now at this point I'm break even. So I have no risk in the marketplace, and now I'm just observing. Right, you see this volume imbalance got respected on the way up. So we're starting to rally here. See if we can attack that high. As we're rallying here though, the dollar's also going higher. So I'm actually probably just going to close, actually, if we take out this high here, I'll close the full position just because it may just be a run on stops. As you see, all right, we've hit it, full position will be closed. And now, right, if we continue running higher, then I just miss out on that move, and I'm fine with that. But I'm fine with basically what I got this afternoon, right, and I'll be content. Here. Right, the immediate rebalance. This is the order block. And then we trade higher, as you see, delivering to buy side. Hopefully this was insightful for some of y'all.